and welcome back to a weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. This past week, we saw the market continue to rise up 0.58%, brings us up year to date 20.74% in the S&P 500. We're back again talking about economic data that underperforms, which then sends the market upwards. So this past Friday, we got the report on the jobs data for the month of August, and we were expecting somewhere around 700 to 800,000 jobs added. We ended up at 235,000 jobs added, so an underperformance of about 400 to 500,000. But if we look at how the market performed, you almost wouldn't really tell. We see that we have some upward momentum to start the week, a little bit of volatility. We hit an all-time high on Thursday, sold off a little bit, but then recovered back on Friday to test close to some of those all-time highs. This doesn't even really count as that much of volatility, so we've just seen an upward trajectory, even with the poor economic data.
Yes, and August was one of the best months we've had for the stock market, and there's been a lot of negative news. On the job market and those numbers, it's very obvious that the Delta variant is taking its toll. I know that when the jobs numbers were announced, there was an economist who sent out a tweet about COVID, meaning that jobs and the pandemic are inversely proportional. So as COVID gets worse and more people contract it, more issues with it, people go out less, they're not traveling as much, they're not going out to restaurants. And we saw that in the jobs number. Of the 235,000 jobs that were added, very few of those were in the hospitality. Matter of fact, the hospitality for the month of August dropped. So they had a negative number of people as restaurants, travel, all decreased.
Now we have economists coming out on both sides, some saying, look, we haven't wound down those federal unemployment benefits yet. That winds down in September. Kids haven't gone back to school yet. So we're not surprised that we're not seeing the best jobs numbers. We've been waiting for the fall. Those are going to be the million jobs added for September, October, November. So you have some of those people are saying, wait, it's coming, these huge job reports. But then you have the other side that are saying, well, in anticipation of these things, usually people start getting jobs. If they're anticipating, oh, kids are going back to school or the unemployment benefits are winding down, you would think that people would start looking for jobs now. So you have this collide of these two thoughts. But what I can say with some fair level of confidence, an underperformance of this much almost solidifies the fact that the Fed will not be tapering or starting to taper September 22nd when they meet next. I think it almost ensures that they are going to need to wait at least 1 month, if not more. If we think back to about a month ago, Jerome Powell said, look, we need 2 good jobs data months before we start to even think about tapering. We had one in July, was really, really good. August did not make the cut. So now we at least have to wait till September to even start to think about it.
And as we all know, the worse the jobs data is, the more likely it is that the Fed's going to push out raising interest rates, which is the strongest tool in the Federal Reserve Bank's arsenal. And as a result, we're seeing the stock market behaving in a positive manner.
It makes sense to us for the reason why the market continues to perform this strongly. As we discussed last week, we think that the market has already priced in some of the tapering. So when we have these shocks in this economic data underperforming, the market actually starts to rise because it realizes, wait, this thing that I priced in already isn't actually happening. So we get more money for longer. Let's go. Well, as always, we appreciate you guys listening. If you find these videos of value, please like it, subscribe to our YouTube channel, share this with friends, colleagues. As always, we're here to support you. Your money's here to support you, and we'll see you again next week.